Warren Buffett is a legendary investor, and in this video, we are going to unwrap the investment secrets that have made him one of the richest men in this world. If you're new here, welcome. My name is Maoli Vodi, and one of the initial secrets of Warren Buffett's investment strategy is long-term investing. And I know you didn't want to hear this, but he specifically invests in companies that have long-term value. So strong management, so business management. We have companies that have long-term potential. So he has extreme faith in the companies that he puts money into, and long-term value. So strong management, long-term value. I want you to look at your portfolio and figure, hey, am I invested in something or companies that have a long-term investment value that I can have faith in and trust in? These are companies that are going to have a strong competitive advantage and also strong management teams. So when he looks at them, he knows that they're companies that he can trust over the long haul. Another secret to his investment strategy is value investing. He specifically looks for companies that are trading under their intrinsic value, their calculated value, and buys them at an opportune time. So the idea that you pay for a company, you're getting value out of that. In fact, he famously said, price is what you pay, value is what you get when it comes to a company. So these are all things that are factored into the buying decision of any company that he owns, and it's made him very wealthy over the years. So when you buy something, remember that if you buy it at a discount, then the profit that you get over time is through the appreciation of that stock growing to its actual value. Warren Buffett also emphasizes one major secret, and that's the circle of competence. Buying companies and investments that you understand, not something that you kind of know, but something that you are fully, intimately just aware of, and and understand it. You're competent about it. He was interviewed back in 2017, and they asked him, why haven't you bought Amazon, or why didn't you buy it? And he admits that he actually just wasn't he just didn't understand the power of their model. And he actually owns some of it today in 2024, but not very much. And it's something that he just didn't quite understand. So he was comfortable in investing in other things. He wasn't comfortable buying Amazon at that time. And it's all based on that circle of competence. If you invest in something you know and understand, you can be confident about that investment. But if you aren't confident about it, your portfolio should show that. It's going to reflect it. And in fact, Apple would be a great example as well, because he was a late adopter of Apple in his portfolio. He didn't buy Apple until 2016. And now today in 2024, it is one of the largest holdings. In fact, it is the largest holding in his portfolio. It's about 50% of his holdings. And it goes to show that if you can also expand your circle of competence, you can be more confident in your investing. Another crucial secret to his investment strategy is to be a contrarian. He kind of does the opposite of what the crowd does. He's known for this quote, be fearful when others are greedy and greedy when others are fearful. And it really just means that don't do what everybody else is doing. And it's allowed him to be able to capitalize on specific things. So when we think about buying something when they're undervalued, it's usually you're buying it when people are selling it and they're scared about the investment environment at the time. But it's essentially being a contrarian. Another secret ingredient to his investment strategy is diversification. And some people probably think that this is boring, but no, it is one way to be sure that your investment portfolio is on the right track. Because again, if you look at the other secrets to his strategy, it makes sense that he's going to be diverse, because he's focused on understanding the investments. And now you can build around that to just reduce some of the risk that's involved when it comes to investing. He basically wants to make sure that he's focused on some few high value stocks versus having everything and being spread too thin. But this is what allows him to grow that portfolio of investments. He basically knows that if he buys companies with strong fundamentals, he's going to reduce his level of risk versus just having so many different stocks and not understanding them or not knowing the risk potential of all of them. So when we talk about Warren Buffett's investment secrets, we're really talking about long-term investing, value investing, maintaining this circle of competence that you can also grow over time, being diverse, and then also maintaining discipline in your portfolio. How are you implementing these things in your portfolio? If any of this is confusing, feel free to check out my other video about the best investment strategy. And it talks a little bit more about implementing these type of things. And lastly, stay present.